Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 17th of August 2015 and we are going to address the recent devaluation of the yuan and its impact on gold and silver prices. There are many aspects to cover, so this video is a little longer than usual. Firstly, we wish to apologise to our listeners for our delayed response. You see, it would have been very easy to have given a knee-jerk reaction to the People's Bank of China or PBOC's devaluation of the yuan, which many of the pumpers did literally within hours of the devaluation announcement. But we wish our channel to be viewed and valued as one that gives carefully considered and deeply researched views and opinions. We have spent many hours since the middle of last week speaking to bankers, currency traders and economists, and read many differing views on what is actually happening. As although we did expect a potential yuan devaluation, we only envisaged it occurring after the September Federal Reserve Bank's announcement on interest rates. This is the current situation and its immediate history. Last week saw multiple devaluations of the yuan against the US dollar, which resulted in a decline of about 3%. Although in global currency terms this is not huge, it was the largest depreciation of the yuan for 20 years. In 2005, China reformed its currency system by unpegging the yuan from a strict tie with the dollar in favour of a looser tracking policy. This last year, in particular, has seen the US dollar rise significantly, not least because it has been seen as a safer currency haven than others, and also because of the market belief in an imminent rise in interest rates, which has also caused the yuan's value to rise. This has meant that China's goods were becoming increasingly expensive, especially when compared to its regional rivals South Korea, Japan, and not forgetting Indonesia, hitting their exports quite considerably. For example, there was a drop in car sales of 6.6% in July, and data at the weekend showing an 8% fall in overall exports and slowing business growth. Further, a survey tracking China's factory output for July also missed expectations by 0.6% for the year. One can therefore understand the central bank's and government's concern over this worrying economic trend. In addition to this, and arguably just as important, China has also been seeking to build on its 2005 reforms in an effort to have the yuan included in the IMF basket of special drawing rights reserve currencies, or SDRs. According to Reuters, the PBOC said it would now calculate the daily yuan fix by taking more notice of market forces, including the closing price in the previous day's trading session. The devaluation sparked fears of a global currency war and accusations that Beijing was unfairly supporting its exports. But the central bank on Wednesday sought to reassure financial markets that it was not embarking on a steady depreciation. So the bank's move to include more information when setting its daily currency fix can be seen as a relaxation of controls, moving the currency a step closer to satisfying the IMF's entry requirements. With oil prices falling again below $50 and the prices of industrial and construction metals such as nickel, copper and aluminium falling to 6-year lows, and a potential glut appearing on the world's markets, the greatest fear arising now is that of further deflationary pressures, thereby causing further downward pressure on prices and delays by industry to invest and expand in a falling price environment. Now for you, our listeners, and us, the key question on our lips is, what will this do for the price of gold and silver? Well, the initial reaction to the devaluation was for gold prices to rise, with silver following. Matthew Turner, who works in London at Australia's Macquarie Investment Bank, told Bloomberg, "When central banks lose control, as the PBOC appeared to do this week, gold tends to do well." New York analyst Dane Davis of Barclays Bank said, "Gold rose because some investors initially thought the US Fed would delay its interest rate increase after China devalued. But that seems to have passed. We have seen in the past few days gold premiums ease from $6.50 an ounce to its normal $2.50 an ounce." So we are all aware of the current situation, but what about the weeks and months ahead? Well, it's true to say that the Fed will have to look closely at its interest rate policy again, in light of the Yuan devaluation. Any delay in raising rates is likely to lead to a higher gold and silver price, as rates were expected by 60% of the financial community to rise next month. The devaluation of the yuan may result in China purchasing more gold as a safe haven, though one could argue that its stock market should see a small rise due to potentially increased exports. However, that said, although the PBOC bought 19.3 tonnes for its bullion reserves during July, Carsten Fritsch, commodity analyst at Germany's Commerzbank, said, "But the monthly volume of 19 tonnes is maybe less than some would have expected." The most immediate factor that could affect the price this week is likely to be the releasing of the FOMC minutes from last month's meeting. This will happen on Wednesday, and so too will the declaration of the Consumer Price Index. So we are faced with an interesting balancing act. Will the price of precious metals fall further because of deflation, and especially silver because of a potential lack of industrial demand? Or will their price rise because of the fear of a currency war? As Barclays Bank pointed out this morning, that China's move last week to devalue its currency was bearish for gold as a commodity, but bullish for gold as a currency. The Citibank Research Department, on the other hand, believes that the US dollar index will top 104 compared to the current 96, thereby undermining the price of gold further. Our view is that gold will operate for the next couple of weeks within a very narrow band, while the markets attempt to assess the ramifications of China's recent activities. It is true to say that September's interest rate hike odds have now fallen from 60-40 in favour to around 40-60. Our view is that short term at least, we now have a floor of around $1,100 for gold and $15 for silver, while the markets digest and analyse the situation. We are still concerned about deflation being the more powerful factor, which we feel could still undermine all commodity prices. The key question, though, is whether Jim Rickards is right in his book The Death of Money, whereby other currencies follow suit and devalue further in retaliation. If that happens, then gold in other currencies will rise in value, and in dollar terms will do so should the Fed then delay interest rate rises and even allowing the dollar to fall further. The next few weeks will give us all a clearer directional trend. We shall keep you updated as events unfold. We hope you liked this video and found the information beneficial. If so, please give it a thumb up, comment, and if you haven't already done so, please subscribe. Also, it would be helpful if you could share this on Twitter and follow us at Illuminati Silv 1 and become a friend on our Facebook page, Illuminati Silver. Disclaimer. Silver Illuminati owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.